Don't be a sheep. Don't just scroll past headlines and assume Airbnb's core business is slowing down. Dig deeper because something much bigger is taking shape. Airbnb just released its Q1 2025 results, and yes, growth is slowing. Yes, the US market is facing new travel patterns, but the real story, Airbnb is transforming. It's no longer just about where people stay. It's about how they book, what they do once they arrive, and what else Airbnb can offer before, during, and after the trip. With a major app rebuild now complete and a highly anticipated May 13 summer 2025 release just days away, Airbnb is signaling its next chapter. For vacation rental managers, this isn't just noise from an investor call. This is the road of the platform you depend on, shifting under your feet, expanding into verticals, and tightening its grip on the entire guest journey. So, in this breakdown, we look at five key questions. One, is Airbnb growth slowing? And what does that mean for the US market? Two, why is the company bringing back its resilience narrative from the COVID era? Three, what's really coming in a May 13 summer release? Four, are hotels quietly becoming a strategic priority again? Five, how does Airbnb's modular guest journey stack up against Booking.com's connected trip strategy? Let's dive in. So, is Airbnb's growth slowing down? And how about the US? Let's take a step back. Airbnb reported $2.3 billion in first quarter 2025 revenue, a 6% increase compared to the same quarter last year. But that year on year growth number can be misleading. Why? Well, their CFO, Ellie Mertz, explained that Easter and Leap Day both fell in Q1 2024. Remember, basically last year, we had one more day in February. And last year, Easter was in the first quarter, where this year is in the second quarter. If you know anything about Eastern weekend patterns, that's a lot of demand going there in the first quarter 2024, which we didn't have in 2025. And we covered this quite a few times at Price Labs on the impact of Q1, Q2 2025 versus 2024 comparison. Be aware of that. So without these calendar quirks and adjusting for currency shifts, growth would have looked more like 11%. So which is double digit. So while growth looks slower, the fundamentals are solid. Let's look at the numbers. 143.1 million nights and experience booked, up 8%. Gross booking value up 7% to $24.5 billion, which is a 9%, up 9% actually, excluding currency exchange issues. So, about geography, CEO Brian Chesky said that 5 countries, US, Australia, Canada, UK, and France, account for nearly 70% of Airbnb business. So, if you happen to speak both English and French, you're able to cover much of Airbnb business. But there is strong growth elsewhere. Airbnb says it's seeing more than double the rate of growth in expansion markets like Spain, Italy, Germany, Mexico, Brazil, China, India, Korea, and Japan. In Brazil, for example, origin nights were up 27%, and first-time bookers increased by over 30%. So in a way, Airbnb's been around for more than 10 years. It's kind of normal that in its core business, growth still goes up by double digits, but it's also low double digit, let's say. But it's also a global company. It's normal that it should seek for a new growth engine in other growing markets, which are not small. Right? Think of the size of India, Brazil, Germany, Spain, Japan. So there's a lot of potential here. Let's focus on the US. Mertz clarified that Airbnb's US business is mostly domestic. International inbound travel only accounts for 2 to 3% of their US bookings. Yes, corridors like Canada to US have softened, but she added, Canadians are traveling, they're just going to different places, like Mexico, up 27% in March for Canadian travelers. She also noted high income US travelers are booking steadily. Short lead bookings are strong, but longer lead bookings have softened a bit. So, what does it mean for you? Well, Airbnb is still growing, but the pace is slower in core markets. US demand is stable, though uneven across regions and segments. Airbnb's strategy remains adapt, reallocate supply, and redirect demand. Number two, why is Airbnb bringing us back to the COVID playbook? Well, it feels like Airbnb keeps talking about resilience. It's on purpose. It's just not just talk, right? CEO Brian Chesky and the leadership team explicitly draw a line from Airbnb's founding through the pandemics to today's uncertainty. Well, actually, Airbnb was founded during the Great Recession, and then they went public. The IPO was during the pandemic. So think about that. So in the earnings call last week, Chesky said, we started Airbnb during the Great Recession of 2008. People turned to us for a more affordable way to travel and started hosting Airbnb to earn extra income. And then in 2020, when the pandemic hit, we provided a way for people to travel close to home. And as a result, our business quickly rebounded. And by the end of that year, we went public. Today, things feel uncertain once again, but as we've shown in the past, as the world changes, Airbnb will continue to adapt. I think they're saying, like, which is like, if there's a nuclear strike, only scorpions will survive. So I guess scorpions and Airbnb. I'm just kidding here. This is not just a message for Wall Street, right? It's for hosts and managers, so us too, right? Airbnb's leadership is reminding everyone that the company has weathered global shocks before, including the COVID-19 crisis that brought travel to a standstill. And remember the time, borders were opening and closing, there's many restrictions. So in a way, right now, even those things are, the international demand is getting soft a bit, for example, things are actually a bit more certain than during the COVID 19. During that period, that Airbnb adapted rapidly, pivoting to local and longer term stays, cutting costs, refocusing on its core business, right? This back to basics approach helped Airbnb rebound faster than many competitors. Now, as new economic and geopolitical uncertainties emerge, Airbnb is signaling will use the same playbook, which is lean into adaptability, offering every type of stay at every price point in every kind of neighborhood. Support hosts, providing tools and flexibility to help them earn income even when travel pattern shifts. Focus on core strengths, reliability, affordability, and a global network that flex with demand. The message is clear. Let me quote them. No matter what's happening in the world, people continue to choose Airbnb. That's because our model is inherently adaptable. We've proven this time and again, from our founding during the Great Recession to going public in the middle of the pandemic. Right? That's really something Airbnb wants to tell the market and tell you, right? That it's things may be softening a bit, but you have to keep on trusting Airbnb. So it's really their message that they want us to hear. For hosts and managers, this means Airbnb strategy is built for a certainty in a way. The company wants you to know it. So, three, obviously, what's important for us as well is that, well, May 13 is the day for the Summer 25 release. Let's talk about it. Well, the company confirmed the date, but gave a very few details about what exactly is coming. Actually, we had more details 3 months ago during the previous earnings call. Um, So we left reading between the lines. CEO says, Brancheski says, we've been focused on long term growth and getting ready for our next chapter when we'll expand beyond places to stay. Let me repeat that. We'll expand beyond places to stay. So, which I guess is short term rentals. What can we expect? Well, while Experiences 2.0, so new version of the experience, is widely anticipated, Airbnb did not confirm any relaunch in its earnings call. Similarly, a marketplace for host services like cleaners, co-host, pricing, support was not mentioned either. It could still be a part of on the roadmap, either on May 13 or later in 2025. One thing they were very clear about: this strategy is all about the app. We spent the past few years rebuilding the Airbnb app on a new technology stack. With this new platform, we can innovate faster, introduce a range of new businesses. That's what they're saying. So that technical investment matters, not only because it took time, it was costly, right? Because Airbnb knows what didn't work in the past, right? Think about the first version of experiences. It struggled. Experiences were listed alongside properties, not integrated into the booking flow. Result, low relevance, poor conversion. But this time, the plan seems different. And that's me interpreting here, right? Airbnb wants to recommend maybe experiences just at the right moment, for example, after booking or closer to checking. Maybe use AI to tailor these offers on the group size, trip type, or even location, right? Because I'm guessing if you use the app, you're on the go. So it means they know where you are, and maybe they whether you just about to enter the place, looking for the address of the place you booked. So maybe it's a good moment to push some kind of offers. And maybe also they want to reach all the guests in booking, not just the one who made the reservation, right? Why not? Try maybe to sell some experiences to your spouse. If you want to book, but your spouse is checking the Airbnb app, why not push them as well some offer? Um, so they also likely thinking beyond the booker, right? So as I said, pushing experiences to everyone on the trip through the app. Airbnb tightens its control over which third-party apps can interact with guest data. This strategy creates a closed ecosystem where Airbnb owns more of the guest journey in a way. So for vacation rental managers, it means more opportunities maybe to monetize beyond the nightly rate, but also more guest interactions inside the Airbnb app, not maybe directly through you. So next question: are hotels back? Right. While most attention is on what Airbnb might unravel in a week from now for their summer 25 release, one quiet shift is already happening. Hotels are returning to the forefront of Airbnb's strategy, or at least they now make it very clear. Um, Not in the first quarter of 2025, Airbnb launched a new feature through Hotel Tonight. Its hotel booking app, offering guests in the US and UK a 10% Airbnb credit when they book a hotel stay. That credit can be used for future Airbnb stays or even experiences. This is the first financial link between Airbnb's hotel offering and its core business. It's clearly meant to turn hotel guests into future Airbnb users. Now, let's be clear, the presence of hotels on Airbnb is still relatively small, but if you listen to the messaging from leadership, you'll hear something else. We should get used to the idea that it won't stay that way. Here's what CEO Brian Chesky told investors. Over the coming years, we're going to be doing a lot more on Airbnb's application to bring more great hotels onto Airbnb. We think almost all the hoteliers in the world would love to have Airbnb as a distribution channel. So, what's the strategy? And it's interesting because in its marketing, Airbnb still proudly highlights the difference between staying in a home and staying in hotels. Right? You may have seen these videos, right, where basically they say that hotels not so great if you're traveling as a group. But behind the scenes, also building the tech, incentives, and partnership to grow its hotel inventory, especially in urban markets or during peak demand when homes are booked out. So this approach allows Airbnb to fill network gaps where, when short-term rentals are not available, capture more bookings from guests who default to hotels, and potentially become a distribution channel that hoteliers rely on. So for vacation rental managers, it does mean that new competition could appear on the platform, especially in cities and during peak periods. I don't think hotels will be getting a spotlight in the May 13 release. Who knows? They did talk about years to come, but Airbnb has made its position clear. Hotels are back, and their footprint will only grow from here. So we talk about these expansions, right? New verticals, new things opening. What could be the impact on Airbnb's profitability? Well, the Airbnb's leadership seems confident the core business is so profitable they say it can fund ambitious expansions without hurting the bottom line. Right? They have a point. I mean, they have net income is $150 million. Free cash flow is 1.8 billion this quarter. Cash on hand is 11.5 billion dollars. I wish I had that money. But expansion isn't free, right? And Airbnb is moving into unproven territory. They've already rebuilt the Airbnb app from the ground up. They teased new verticals, right, from Experience 2.0 to host services and travel extras. And they're committed to spending 200 to 150 million this year, 200 to 250 million dollars this year to launch and scale these new bets, these new verticals you want to enter. That includes hiring, onboarding new supply, potentially global marketing. The cost isn't just in development, it's in operating and growing these services across dozens of markets. Airbnb is not hiding this. They've already warned investors, right? Margins in second half of 2025 will be flat to slightly down, even if revenue keeps rising. That's because they're prioritizing speed and scale, not just maintaining margins. For hosts and managers, it matters. It means that Airbnb is in a strong position financially, but some cash will be used towards testing ideas. And not every vertical will be a success, right? So there will be growing pains, especially if the product changes affect the booking flow or guest behavior. So Airbnb is placing long-term bets where it's not risking its core business, it's accepting short-term cost increases that expand what Airbnb means to guests and to you. Last point I want to mention, which is the uh, difference between Airbnb and Booking here, right? Different strategies, especially in the US. Airbnb and Booking.com are both dominant platforms in vacation rental space globally, but their strategies and exposure are diverging in key ways. Let's look at the US. Airbnb's US OS is built primarily on domestic demand. CFO Ali Mertz confirmed that only 2 to 3% of US bookings come from international guests. In contrast, Booking.com's US value proposition has long been we'll bring you international travelers. Well, given the let's say political tensions in 2025, that strategy is showing some sign of strains. Booking Holdings earning call a few weeks ago said we saw moderation in trends for inbound travel into the US, particularly from bookers in Canada, to a lesser extent from bookers in Europe. So, with political certainty, tariffs, shifting sentiment under potential second Trump administration, international demand into the US is softening. So, may mean that Airbnb may be better positioned for the moment to capture domestic bookings in the US, but the company need to pivot to engage more US based travelers. And it's probably doing this. Another point about the Airbnb, what's interesting, Airbnb, I think there was Airbnb CEO, was not nice to Booking.com, I think, right? Booking.com has invested for years in the Connected Trip, a bundled offering where travelers can book flights, accommodation, rental cars, or cool attractions all in one go. They brand this explicitly as the Connected Trip. Airbnb, by contrast, is going the other way. In earnings call, CEO Brian Chesky said, some companies want to plan every part of your trip for you. We do not believe that works. A lot of companies have failed to design like a so-called connected trip. Well, only Booking.com uses the phrases connected trip. So while Chesky didn't name them, the target was clear. Airbnb's approach is more to let the guests build their trip gradually, introduce services at the right moment, like after right at the moment of booking or during check-in, or keep it all within the Airbnb app. So this isn't just about bundling everything up front, it's about relevance, timing, personalization. So both strategies can work, but for different reasons. That would be interesting to see. So all in all, Airbnb's Q1 2025 results confirm it. This is no longer just a platform for finding a place to stay. It's a full ecosystem, growing, evolving, rebuilding itself for the next decade. As a vacation rental manager, here's what you need to know. Growth is steady but not spectacular. Airbnb's expansion is more strategic than explosive. That means more tools, more structure, and possibly more complexity. The app is the center of gravity. Every new feature, from Experiences 2.0 to AI support, is being designed to work within Airbnb's app first. Guest touchpoints, upsells, even service recommendations could all happen inside that ecosystem. Airbnb is investing while staying profitable. They're not taking wild risk, but they are placing long-term bets and they'll use their strong cash flow to fund them. And this will be expensive and may fail. The guest journey is being reshaped, right? It's not just about the booking anymore. Airbnb wants to be relevant before, during, and after the stay. What comes next, starting with May 13 for the summer 25 release, could change how your guests discover you engage with your property, interact with Airbnb itself. So stay alert, adapt quickly, because Airbnb isn't just building for the present, it's designing the future of short-term rentals on their platform.